This never fails. This happens every single year. Somebody will underlist the property. It will create a ton of hype. It will catch the media's attention. Here we are now. 85 offer bidding war comes to an end in a Mississauga house. Now, I'm not going to get into the details of this particular listing. It's irrelevant. But what's interesting is this happens every single year in the beginning of the year, and then it creates a certain type of narrative going into the spring market. What's entertaining about it is obviously with my own clients, whether you're on the buy side or the sell side, and some of you are probably watching this, is that I get asked a lot, well, listen, what's happening with the market? Look at this bidding war in Mississauga. Like, I mean, how is that going to impact my listing? Am I going to get more money than what we originally thought? And on and on. And obviously it makes sense to ask those questions when you're seeing this all over the media and everybody's talking about it. Unfortunately, it's not quite that simple. So in this video, as always, I'm going to break down what is happening in the market right now in the GTA at large. The Toronto Real Estate Board just released their numbers. There are some interesting things that have actually happened this January, and they're going to vary depending on what type of property you have or what type of property you're looking to purchase, and more importantly, where. So if you have questions specific to your area or your situation, you can always text me or email me. This video, we're going to talk about the market at large and the trends that are developing right now. So let's get right into it. First order of business is context. So this is the price change based on seasonal norms, based on 15 years of data for the GTA market. This is all based on median price. The thin line is typically what happens in a regular year. Prices will go up 8 to 9%, and this is kind of the trend they follow. In 2023, we had abnormal inventory, and we're going through interest rate hikes. So obviously this is kind of what created this massive roller coaster of price change, and ultimately we ended the year with a 2% gain, which has already been wiped out, which is a precursor of what I'm about to show you. Why do we need this context? Just to understand the seasonality of how things actually evolve into the year. What you'll notice here is going from December into January, prices usually will go up by 2%. And that is what we would be expecting going into 2024. And here's 2024. So if we were supposed to go up roughly 1.85% based on seasonal norms, our price going from December into January actually went down 2%. This is something that happens very rarely. In the last 16 years, this has only happened 2 times, in 2009 and 2019. And this is the 3rd time that it's happened now in 2024, where prices dropped 2% despite all the hype of bidding wars and everything we're seeing that's out there right now. A lot of things on the price chart can be explained by the active inventory that we currently have on the market and how many deals are actually getting done. So 2023 was notorious for low deal flow, and that's the green line right here. So this is typically how many listings are sold during a normal year, and this dotted green line is what actually happened in 2023. So as you can see, we're actually hitting like record lows. I think October was the lowest month on record in terms of how many deals actually went through. We're, I think, roughly 50% less than normal. Now, this was all happening during the spring when inventory was actually lower than where we seasonally should be, and then towards the back end of 2023, inventory and new listings were pretty much on par. We ended the year at the end of December pretty much where we should be. New listings were in line with where we should be, and the gap between where transactions should be versus where they were was narrowing, meaning that the market was starting to behave in a seasonal way. So what happened in 2024? We're coming back to a seasonal market. So right now, what's actually very good is that transaction deal flow for January was in line with seasonal norms. That means there's liquidity in the market. New listings were a little bit lower, maybe 10% lower than where they should be, but that is not that material of an impact compared to what was happening last year, where we had severely less listings. But liquidity is back, transactions are happening. Now, another story is that there's a lot of inventory out there, a lot of coming soon signs and all this other stuff, and that is totally normal for January. You have to keep in mind that right now, for the month of January that was just finished, we actually had 10 to 15% less active listings than we typically do. So in theory, we still actually have a shortage of inventory as we speak. The reason it doesn't feel like that is because we've had record low active inventory for about 12 months now. So it feels like there's this huge run up of inventory that's on the market, but that is because of just the recency bias that we've had. What do we make of all of this information? Ultimately, there's a lot of hype that it's very busy out there. And yes, it is busy relative to how slow it was, but activity is actually normal or a little bit below. What's good about this particular market, at least as far as I'm concerned, is that liquidity is back, buyers are back. Prices, that remains a question mark, whether or not they're going to go up, stay flat, go down. That is going to be a question mark that I think we're going to need to see another 2 or 3 more months of data But as of right now, there's liquidity and there are buyers. So that is the good news. So that if you're looking to sell, you can actually sell rather than list and then sit on the market and price reduce and ultimately not sell, which is pretty much the story of 2023. If you found this video useful, please like the video, subscribe to the channel, and I'll see you in the next one.